Hello and welcome to Pro Trader Strategies Market Commentary for Monday, January the 23rd. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Really no economic data to talk about, as goes for most Mondays. Usually pretty quiet on that front for the economic picture. We did get some stuff out of the European side, but really nothing to speak of besides consumer confidence coming in at -5 versus the expected -5. And we had Mario Draghi speaking. Other than that, later on today, we got the flash manufacturing PMI for Japan, but that's not until later this evening. On to the overall markets. We've got crude oil right now just down about 50 cents on the day. Overnight, if we look at it on a daily intraday chart, we could see that on the open, crude oil was at its low. It was looking like it was going to try and retrace all of Friday's gains, but then as soon as the market opened, it was gangbusters the upside, and as you can see, it kind of rallied about almost 70 cents in the first hour or so of the day. So basically hour and a half to just about where we are right now, maybe 20 cents off of where we were off of that rally this morning. So crude oil still down on the day, as are the equities. So that's part of the issue with the pullback in the equities as well. Then we have the gold futures up 13 points. Pretty big day move. As soon as we get above that 1200 area, the bulls are still in control. We talked about this crossover here. That is pretty key. The target looks to be like the 200-day moving average, which is going to be right around 1235. So we'll have to see if that happens this week. I talked about it last week. It looked like that was going to be a target to try and get to this week, and I think that that's what the market is looking for, especially if we start seeing a broader pullback in the equities. Bonds up big on the day, up 1.5 right now, above that 9-day moving average that we broke back below again last week, and it was looking pretty bearish. It hasn't been able to really get above this 50-day moving average and settle above there. So if the broader markets again in the equities continue to weaken this week, we should easily see that happen as the shorts and bulls, or shorts in the bonds, start to look to cover and get out of those if we start seeing a flight to safety, if you will. Dow Jones Industrial Average back below that 9-day moving average again on Friday. Try to get up and above there, really kind of just pinned right on it as the bulls and the bears kind of defended that line in the sand today, really giving it up. The Dow Jones Industrial Average down about 85 points right now. Then on to the NASDAQ, it's given up the most in terms of percent, down about 24 down about 24 points right now on the day, but well below Friday's big rally on the historical move to the upside. It was an intraday print, but not a historical high settle necessarily. So the overall broader market pulling back today. We could easily see it this week coming down, and this is the target I think that it has in mind right here at about just below that 5,000 mark. I think we could easily see that print this week. Onto the mini S&Ps, down about 13 points on the day. Again, giving up all of the move, but this is going to be really the key, getting past this consolidation of time and volume, and then again could easily see it want to come down and try and test that value area high, but really getting kind of wound tight as the rubber band winds tighter and we trade sideways for a while. It's going to snap one way or the other. I'm to the idea that it's going to want to snap to the downside and maybe test that value area high. So keep that point in mind somewhere right around 2200 is where I think that it's going to want to try and go to. This is the market on the open. As you can see, we were on the highs as soon as the market opened, went up, printed that, and now just kind of fell out of bed for the rest of the day, just continuing to come off. Then on to a few things that I've done. Now these were trades that I had put on back. This particular trade for United Steel, ticker symbol X, put on back at the end of November, beginning of December, and just wanted to play it to the downside. It looked like it was overdone to the upside to me, so this was probably right around, I think it was like the 11th or 1129-ish area. Thought we were going to see after that move there come down and test the 27 handle. Didn't happen. Market continued to rally to the upside and consolidated. Time theta decay on this trade did not work in my favor, nor did the directionality. And I had on the January 27 puts that I bought, paid $1.25 for those. Let those expire worthless, just waiting for the end of the day. It was just not working out, and decided to let that one ride just in case we got some kind of move in U.S. Steel. Just never happened, so let those expire worthless. And because it was a debit type of trade, I'm not going to try and throw good money at bad money in that kind of situation. I paid a debit for it. Those are the ones I just kind of let go. If I get a credit for it, those are kind of the times that I'm going to roll that out and collect more credit for those. But with that one, just didn't work out. Then in SPY, I had on a put calendar in there and had tried to collect a little bit more premium to keep that dream alive, if you will, but I decided to put this into a synthetic short this morning. So I still have on the February monthlies, and I'm long the 224 puts in there. Let the short 224 puts in January expire worthless, then rolled or put on a new trade around that by selling the February weeklies that expire on February 3rd. Sold the 224 calls in there for $3.25. So that creates a synthetic short in SPY, because I'm short the calls, long the puts a little bit further out. That creates a synthetic short type scenario. So that's what I'm looking for. Hopefully we can get that pullback that I'm looking at in this market, at least this week, and that will work out really well if I can get that to pull down in this week and test at least the 9-day moving average and at least the 50-day moving average and or that value area high in SPY right there around 221. That would be a dream come true for sure. Then on to Adobe. This was one of the trades that we were looking at in Friday's webinar. Last Friday we did it on the short put butterfly. Now this one fits all those rules that I talked about with the low implied volatility, or right in that range of lower implied volatility, and I'm able to hopefully get the premium that I'm looking for in that one. So with this one, I'm currently looking at the Adobe trade with the February monthlies, and I'm looking at doing the 100, or actually selling the 100 puts, buying 2 of the 110 puts, and then selling another of the 120 puts. So that fits right in line. I'm trying to get around $6.30 for that. Adobe was up $1 on the day. It was actually looking a lot better when I entered that trade, but as you can see throughout the day, this market has completely just sold off and come right back down to that value area high. And the volume node for Adobe is just below that. So I don't know if I'm going to be able to see that happen now that we've come back off. It could easily want to go back down there and test that volume and time node there. So we'll have to keep our eyes out on that one, because I need it just a little bit higher in order to get my fill in that. There's also, because those puts, those 120 puts are pretty deep in the money. Those bid ask on that one's really wide. So I don't know if I'm going to be able to get that strike off. I may have to end up lowering it, but I'd really like to get somewhere up above $6 for that trade. So gonna let it work throughout the day, and maybe have to tell you guys what my price is tomorrow, because it's not really close now. It's kind of gotten away from me. All right, that's about all I got for you guys today. Friday's webinar is going to be on the long call butterfly. So flip of this butterfly segment, we did the shorts. Now we're going to be doing the longs, and I'm going to talk about all my rules around these butterflies because it's really important. Yeah, it's easy to set up a butterfly, but it's hard to set it up where you have a higher probability of success, and I'm going to show you how to do that in that webinar. So go to protraderstrategies.com and sign up for it. If you can't take that, take it easy.